So, Mr. Beudin, the first question is for you. The investment by Euronext and the Greek Athens Stock Exchange it made headlines. It was hailed as a vote of confidence in the Greek economy, in the and the prospects of the Greek economy and the Greek capital markets. So, my question is, what does the new Euronext ownership change for the Greek capital markets, and how could reinforce the attractiveness of the Greek companies?
Well, first of all, thank you for having me tonight. I'm very pleased to be here in Athens. I'm coming very often now into this city. So you raised a question about what did change concretely for the Greek capital market, the new Euronext ownership. I think the first thing is on the liquidity. And it has been mentioned on a few occasions in introductory speeches. Liquidity is the name of the game. And what Euronext is bringing is the largest liquidity pool in Europe. We have a presence now in 8 countries in Europe. So the group was created through the merger between France, Belgium, and the Netherlands in 2000. Shortly after, was joined by the Portuguese. And since then, we've expanded in Ireland, in Norway, and Italy. And I think that now we have a size of a liquidity pool which is twice the size of the London market, with about 14 billion traded every day on Euronext markets for equities, and which is 3 times the size of the German market. And this is really a game changer for company when we connect the local ecosystem to the single technology platform, to the single liquidity pool, and to the single order book, making reference to what you were saying before about connecting liquidity in a single order book. So we have that single order book at Euronext. It's demonstrated significant results when we connected the Irish market, when we connected the Norwegian market, when we connected the Italian market onto this single order book. What are the results? The first is that the traded volumes are increasing significantly. We had between 20 and 35% growth in traded volumes in all new markets that joined our liquidity pool. And this translates directly into tighter spreads for company. And this is what is very important when we talk about liquidity, is about financing conditions for companies and about spreads. And this is an important KPI I would like to insist on. The second topic that Euronext brings to the table is for non-listed company. I know that here we are part of an association of listed companies, but it's even more important for non-listed companies to be accompanied in the trajectory towards an IPO. Because an IPO is a big change, and many of you in this room have been through this change and this journey. It's a significant effort because you need to review your governance, you need to define an equity story that is palatable to investors, you need to change the way you report, you need to define a capital allocation policy. And all these things are very complicated when you are not used to interact with I would say sophisticated, but it's not the right word, but investors that are buying shares every day in listed companies. So what we do at Euronext is that we provide pre-IPO programs that we are deploying in Greece in order to help entrepreneurs, to help management team to navigate through the complexities of the preparation of the IPO. We do not do that alone. We do that with partners. It could be local market participants, banks, lawyers that are part of this program. And this is free for company, and they could be part of this cohort of pre-IPO candidates, whereby months after months, quarters after quarters, they will learn about how to do a successful listing on the market. And the final thing that an exchange can provide is also tools to direct investment to the companies with a sectorial approach. So I'm talking here about indices, exchange-traded funds. Those are important vehicles in order to direct investor flows into companies. And Euronext is investing into that, and will continue to deploy new indices, new ETFs to facilitate the investments in Greek companies.
Mr. Vredzos raised an issue of that one size doesn't fit all. Ms. Ruth as well raised an issue about the alignment. You heard her. And I would also like to ask you about the remaining hurdles that the hardest to scale European capital markets?
So I think we have a problem in Europe about fragmentation. And fragmentation is becoming an issue because each time you have a European directive, then you have a local translation, and with local gold plating, red tape. And what Euronext is all about, it's about harmonization of rules and processes. And if you compare ourselves to the US, for instance, whereby you have one SEC, in Europe you still have 27 national competent authority for supervising market infrastructures issuers. You have as well more than 20 stock exchange. You have 30 post-trade market infrastructure. It's too much. So we need more consolidation and we need more harmonization of processes so that the market becomes more visible to the external world. Because for investors that are abroad, outside the European Union, they don't understand this fragmentation. The second topic is that Euronext is a voice in terms of advocacy to represent the diversity of the European ecosystem and to harmonize processes. I'm giving you one example, is that we have been a strong force of proposals for the Listing Act that was adopted by the Commission a couple of years ago. One important point for us was to have a single prospectus, because in order to do an IPO in Europe, you have 27 different frameworks. It doesn't make sense if you look at it from the investor standpoint. In the US, there is an S1. In Europe, 27 different prospectus. So now we have the approval of our regulators to have one single prospectus across Euronext markets that would make it easier and more palatable to foreign investors to invest into IPOs of Euronext listed entities. The second point is around a big problem that we have in the European market around how we direct the big savings we have in Europe into productive investment. And it's been to a certain extent discussed in the context of bank loans versus equity funding. But the topic is even more blatant when you look at what is the use of proceeds of the savings of Europeans. And in most cases, they are investing in low-yield instruments, fixed income instruments, so to finance government debt. And I'm mentioning that because I'm coming from a country that has a 5.4% deficit to GDP, and where the government today doesn't have necessarily the right incentives to move the fiscal and tax incentives that they are giving to households to direct them into productive investment. And that's a big thing, because I think what we are missing in Europe is the right tools to redirect investment into productive savings. For sure, this is a topic that has been going on in many, many countries, but we need to act on that. And we are as well working with market participants here in Greece to define a list of potential market reforms that could be proposed in order to improve the framework, in order to provide the right incentive for companies, to provide the right incentive for retail participants to invest and to fund the equities that is needed by Greek companies to continue to innovate and grow.
So if I get it right, if I get it right, I remember now 3 weeks ago, it was 3 weeks ago, President von der Leyen hinted at something like a 28th framework, a 28th legal system for startups. You're suggesting that something like that should apply to listed companies as well?
Yeah, I mean, first, the topic for listed companies is about proportionality, and it's about level playing field. Level playing field because, for instance, I mean, we are all committed in this room to the ESG agenda. I think there is no question that sustainability is an important topic. But how come does it not apply evenly to listed and unlisted companies? So I think what we are advocating for is a form of level playing field between listed and unlisted companies, because non-listed companies, as listed companies, need to do the same to save the planet, right? It's not a matter of being listed or not being listed. So that's one. And the other one is about proportionality. I mean, it has become very cumbersome in terms of reporting requirements, not only for large cap, but also for mid cap, to report on a lot of KPIs. So there has been an omnibus package, a simplification agenda that is in the making and that has largely come into force, but we are not there yet in terms of what sort of red tape and reporting requirement that do not provide tangible benefits that we could get rid of. So Euronext has a role to play, and we are really the voice of European companies. We have a good dialogue with the Commission and with the national competent authorities in order to create a framework which is beneficial for listed companies.